All right, everyone. We've got Rob Leshner from Compound, who I think needs no introduction. Rob, welcome to Empire, my friend.
Yeah, excited to be on the show today.
Yeah, man. You going by Rob or Robert these days?
I think I've always gone by Robert, but some friends call me Rob sometimes. So
over some beers, it's Rob.
Yeah.
All right. So I get the moral of the story. Call you Robert today. So anyways, Robert, we wanted to have you on the podcast because you sent out this tweet which said, "Make no mistake, the government wants to kill one of the most important and innovative segments of the U.S. economy, which is crypto." We're coming on the back, and that tweet kind of comes on the back of Signature closing, SEC forcing Kraken to shut down staking. What else happened? Coinbase's Wells notice, CFTC sued Binance. It appears that Operation Choke Point 2.0 is here. So I think we just want to kick off this conversation and get your take on the backstory of this tweet and how you're feeling about things right now.
Yeah, and it's a great question. So that tweet was really an acknowledgement of what most of us in the industry are seeing and experiencing, and which is Operation Choke Point 2.0. There's at this point it's almost not a controversial statement that there is a coordinated effort to debank the crypto industry through, not entirely, normal policy means or legislative means behind the scenes in a way that is not normal. Very similar to how Operation Choke Point 1.0 tried to debank a legal industry in a, inappropriate approach. And we're seeing that right now with crypto. You mentioned both, Silvergate and Signature Bank. These were the two primary US on and off ramps between the banking system and crypto. Both of these went from, functional to non-existent in an incredibly short amount of time following statements by, banking industry regulators to the banks, by legislators like Elizabeth Warren publicly, and by a number of actors in the ecosystem that were somewhat excited for these banks to fail and for their activities with crypto to no longer be functional. Besides all the things that have already been written, great examples of this are that even post failure, the entire banking apparatuses of Silvergate outside of crypto are functioning normally. Signature. Signature was sold to another bank, and all of their customers, with the exception of crypto customers, are up and running. All of the crypto customers were debanked in that process. Both the Signet payment system and the crypto balances were not restored. And the bank, having gone through, a sale, transitioned from being one that served crypto companies to one that does not serve crypto companies. Silvergate, likewise, is 100% offline for crypto companies. The Silvergate exchange network and all financial services that they were providing are gone. And at this point, there's almost no, mainstream supported infrastructure for, legal institutions that interact with crypto to interact with banking system. Most of the economy has shifted over to Cross River Bank, which is just a single bank of not considerable size, which has become essentially the lone bridge between banking and crypto organizations. But, pretty much the map was wiped clean, in an incredibly short amount of time due to government action in an unanticipated way. So, my tweet is really just an acknowledgement that there's an effort to debank crypto, and it's been, unfortunately, incredibly effective.
This episode of Empire is brought to you by Quicknode. Quicknode is an end-to-end blockchain development platform that makes building Web3 apps super easy. No matter what you want to build, you can effortlessly develop any application by leveraging their elastic APIs. Go to quicknode.com, use code Empire. You'll get a free month on their feature-backed build plan. That's right. Go to quicknode.com. You'll get a free month to start playing around. You'll hear more about Quicknode later in the show. This episode is brought to you by Synthetix, the liquidity layer for DeFi derivatives. With Synthetix v3, any protocol can now tap into Synthetix liquidity to bootstrap derivatives markets. You'll hear more about Synthetix later in the show. this word unanticipated is is an interesting word. Were you expecting this at all? And if you were expecting it, like how long did you know kind of feel like this was coming? And if not, yeah, it's interesting. This kind of took everyone by surprise so much.
Well, this took everyone by surprise because in a lot of ways this was like an extrajudicial, process.
Yeah.
This didn't come through the legislative process where, you know, people had a chance to form policy. This didn't even come through like administrative policy. This came through, behind the scenes actions that were taken in a short amount of time. And so I don't think anyone had the ability to anticipate that crypto would be debanked so quickly and so effectively. There was a lot of, fear following the collapse of FTX that there would be, strong actions taken against the industry as a response. But I don't think that most individuals within the industry anticipated that, the attack against crypto would be so widespread and so rapid.
Yeah. Have you got any sense of like the why behind this?
I mean, anyone's guess is as good as mine. I don't have any,
You don't want to put on your tinfoil hat with me and start to get into some of the theories.
Well, I mean, I think the simplest theory is that, following the collapse of FTX, this provided, a justification that people that were already biased against crypto had. And this gave them the justification that they were looking for. Simply put, I think it made, the timing easier to attack crypto. And so, why, do people want to shut down a legitimate industry? It's hard to say. There's a lot of aspects of crypto that are, extremely positive, and I think in the long-term best interest of regulators, of policymakers, of our economy, and of, all financial markets. And so, it just, in my opinion, it was just like, coincidental timing, but I think it's a reaction more than anything to FTX.
Yeah. How has this impacted your guys' product strategy at Compound? Because I mean, we were following the Compound Treasury launch pretty closely and like the build out of that. I'm just curious how you think about those kind of products in the wake of like a US regulatory crackdown.
Yeah, so Compound Treasury, was envisioned as this bridge for
Right.
institutions to access DeFi, going through a compliant, central counterparty and having a middle layer between institutions and DeFi. So, this has been, announced elsewhere, so it's not like breaking news, but, at Compound Labs, we have been in the process of shutting down Compound Treasury. It's a function of multiple things. One, the business climate has shifted. The idea of using a middle layer between you and a smart contract doesn't look as appealing as it did before the collapse of FTX.
Yep.
There was a time when institutions wanted to interact through a counterparty, but I think now everyone is unbelievably, skittish about custody of, their assets, and like having any layers that are unnecessary make less sense today. And so it's really a market reaction more than anything else. But we are shuttering the Compound Treasury product, which is a small amount of collateral damage and just a very meaningful shift in market structure. But it's really just a result of institutions and their preferences changing in the wake of massive exchange failures.
You remember the DeFi Mullet? FinTech in the front, DeFi in the back. You make me think that might have been the wrong thesis here, actually.
Well, I think long term, the DeFi Mullet might be like a really strong thesis, which is, you're going to have, transparent, autonomous protocols on the bottom and institutions that are like business forward and serious on top. But really the question is what's in the middle and how does that work?
Yeah.
And, long term, I do think the DeFi Mullet is going to win. It's going to be a viable theory. And, we're just going to have to, as a society, like figure out how to deliver the benefits of DeFi to a wider, more institutional audience.
Yeah. It's also just a tough business. The aggregator business model is also just a tough business model. It provides a lot of value to users. Like if you think about the DEX aggregators, really a lot of value to users, but just a kind of crappy business model.
Yeah, it's one of the things we found. I mean, it was
Yeah.
not, it was not a successful business, but that's also just a function of, the macro interest rate environment. So one of the really big trends that's happened over the last year is interest rates in TradFi have eclipsed interest rates in DeFi. And, one of the symptoms of that are, banks like SVB blowing up that just, took too much interest rate risk. But the other is that you don't have people trying to grab DeFi interest rates as much as they were before. They're much more willing to say, let me grab those T-bills as opposed to grabbing DeFi interest rates. And so that's really the other macro shift. And so when you combine, these two things, like extremely skittish and less trusting of any counterparty, even, ones that are as credible as you can get, Compound Treasury was rated by, S&P Global, a rating agency. It was like designed to be, as good of a counterparty as you could have. Plus this macro shift, it means that middle layers between institutions and DeFi are just going to have to rethink how they go about things.
Yeah. Been thinking a lot about that. Like what pulled people into DeFi was, I mean, kind of in part you guys kicking it off with like kicking off DeFi summer, and then people kind of came for the token incentives and kind of the games almost, you could say, and they stayed for the yield. What do you think pulls people back into DeFi? And then what is that the same thing that gets them to stick?
Well, this is a long-term statement. This is not like a short-term statement. Like I only really think about like, things in the 5-year, 10-year sense. The things that are going to pull people back into DeFi, I actually think are the virtues of DeFi that are being, brought to the surface by all of this calamity. So the virtues of DeFi are that you don't have, this opacity, which has led to a lot of problems, right? That's the first major thing that's going to pull people back to DeFi. And the second is going to be the automation and the composability of DeFi. This is like, it's going to go full circle. And these are like really OG statements. But the things that are going to pull people back to DeFi are the benefits of self-custody, right? You're not going to have to trust an exchange to be lying to you or not, or telling the truth about how many assets they hold. FTX, is such like this glaring example of like, you really can't trust what they say, right? Versus DeFi, where it's you can validate yourself, where pretty much any like, trained person on their own can validate, the balances of a DeFi system or the health of the DeFi system in real time. Like compare those two things. It's like take their word for it or validate it yourself. If you don't have to be afraid that you're being lied to, it's an incredibly powerful thing. And so I think like DeFi is, superior to CeFi there. Okay. The second thing that's going to pull people back is automation. This is, a cost argument, but DeFi works 24/7 autonomously with no real managers or upkeep. Compare that to a CeFi anything. Long term, I think like autonomous smart contracts just on their own are going to be seen as just like a much better tool for implementing financial markets than how financial markets and products are implemented today. It costs literally nothing for the smart contract behind Uniswap or MakerDAO or Compound or whatever to operate. It's truly unfathomably awesome. And that autonomous nature of it, is a huge magnet for developers and markets over time. Just the amount of effort that has to go into maintaining legacy markets, from reconciliation to like accounting to like, all of these things, it's just like horrendous. So like automation is going to be a second thing that just pulls people back over time. And we might see it in interesting ways. Like, I can imagine like, in a distant future, people, will choose to, purchase an asset, in DeFi over the other one because just like the upkeep is less operationally. And the last thing that I think is going to pull people back into DeFi is composability, right? And there's like a network effect to composability that you don't often get in traditional markets. So, if you're a customer of, E-Trade, what's happening at Fidelity doesn't really matter to you or it doesn't really benefit you. But when you're in DeFi, what's happening at, Uniswap benefits from like the changes that are happening in MakerDAO, or benefits from the changes happening in
Right. Yep.
Compound, or benefits from, everything else that's getting built, because it's all interoperable in a way that, CeFi and TradFi are like completely siloed. Like, if you have a balance at Coinbase, it really doesn't matter what Gemini's doing because you can't use them together. But, when you have your own balance in DeFi, you benefit from all improvements to the different, applications and platforms, in parallel. And so that's a really powerful feature that, is kind of like this hidden tailwind behind everything that I just think develops a network effect that gets better over time. And so eventually, people are going to be, coming back to DeFi in full force. It's not about games. It's not about, whatever, like, momentary thing. Like, the virtues of it are so strong that eventually DeFi is going to win. And I think that all of the calamity of late is just reinforcing of that fact. It makes me more confident about the virtues of DeFi.
Let me ask you this then. Do you there's kind of like two views for like mass crypto adoption right now. I'd call them like the Bitcoin route and the ETH route. The ETH route is that you are spot on. Composability, faster, cheaper, composable systems will eventually build better products. And yeah, we're in a bear market, but eventually DeFi is just a 10x better product than traditional capital markets. And that pulls people into the system. And voila, we've built L3s on L2s on ETH, and like, boom, amazing system. That's what I'd call almost like the ETH view. And like the view of, I think, a lot of people right now. Then there's the view that's maybe come to the front in like the last 30 days, which is the Bitcoin view, which has kind of been quieter the last couple of years, which is, hey, maybe the system is actually kind of falling apart a little bit. And we do need a way to store capital in like places where there isn't collateral risk. And I think we kind of all saw the virtue of Bitcoin in the last couple of weeks as people were trying to move capital outside of the traditional financial system. So I'm curious, like, do you think are you like all eggs in one basket? It's going to be ETH. You're not worried about the system breaking. You just think better products will be built. You're like all eggs in the Bitcoin basket, or like a little bit of both these days?
Yeah, I would say I'm like, 90, 10 on this, where, I think in terms of a technology, I think, the ability to build transparent, autonomous, composable financial systems is more powerful than the ability to have a censorship resistant financial asset, long term. I think having a censorship resistant financial asset is awesome. It's so important. It's like, the proof that creates everything else. But, long term, it's relatively arbitrary, that Bitcoin will have value relative to everything else on earth. I personally don't own any gold. Okay. Not because, I don't think gold is cool, but like, I don't own any gold, but because it doesn't really do anything. It mostly just sits there. And, it's not that useful of an asset. I would much rather own a company or shares of companies than would gold. And I think of Bitcoin the same way. If you need something that, is, truly just a financial asset that doesn't do anything, Bitcoin is great. And its properties as that are great. But I don't think, having another, just like financial asset is as important as the technology that proves out the programmability and transparency and autonomy of a whole new generation of finance, which long term I think is going to be more valuable and more important.
Yeah, I would tend to agree with you there. I have a couple more questions on the regulatory side of things, and then I want to get your thoughts on some other stuff. I guess just like as a founder and as a builder of a protocol, when you see the US kind of cracking down on this, and then you see, Circle looking to get regulated in France, and I think it was Gemini this week was announcing they're going to potentially launch derivatives in Europe, and Coinbase is leaning heavier into their European business. Like, how do you think about kind of weighing the pros and cons of operating this protocol that clearly the most powerful 3-letter agencies in the US are not fans of these days, and how do you think about like look, is it even worth it to build in the States right now?
Well, my advice to, most founders now when they ask my opinion is, if they have the opportunity to build offshore, I encourage them to do so. At this point, the majority of my time is spent at Robot Ventures as an investor,
Right.
talking to founders. And, this
Wait,
comes up.
building offshore, Robert, does that mean like you are living offshore? Does that mean your customer base, you are only targeting folks outside the US? Like, what does that actually entail?
Yeah, I mean, it's all of the above. The best case scenario for founders building new things right now, unfortunately, and this is a massive, unfortunately, like I wish the reality was the opposite. But, right now, if founders have the opportunity to live abroad and build abroad and organize their companies abroad, they should, simply because the US is unfortunately incredibly hostile to innovation within the cryptosphere right now. No matter how well intentioned organizations are, no matter how hard they try to comply, it really doesn't matter. When you look at Circle and Coinbase and Gemini and all of these institutions that have hung their hat on compliance, for years, they've been in the crosshairs. That should be all of the evidence that people need to know that like there's an easier path right now. Like the best intentioned actors are being targeted. It's not, the frauds and, the scams and, the truly like malintentioned operators in the ecosystem. It's the best intentioned, most compliant organizations that are being targeted, which, is generally not how the rule of law works or should work, but it's the reality. And so, I think most innovation is going to start occurring offshore. It's clearly detrimental to the long-term interests of the United States. It's unfortunate. Yeah. I wish this wasn't the case, but like most founders now are just reconsidering where they build from because the US is incredibly hostile and a lot of other countries are becoming more and more embracing of innovation. And I think like the tables have turned in that the benefits of US markets aren't necessarily worth it anymore to a lot of new founders.
Yeah. What about existing founders? I guess what about yourself? I mean, how long have you been running Compound?
Well, I don't run Compound.
When did you start? I don't know how I'm supposed to say it, but like when did you kick it off?
Yeah, so I founded Compound Labs in 2017, which is a really long time ago at this point, and the world was very different in 2017. Right. If I had to, start from the beginning, I don't, I think I would take my own advice and probably locate offshore.
Yeah. Are there other things that you would have changed? Like, would you have not launched a token or would you have done it differently? I guess what would you change now with, obviously the insight of hindsight?
Well, I think, the Compound protocol is actually like a really successful example of how to build a system that's not controlled by, a centralizing agent. And all of this was developed in the open as sort of a playbook example for society at large of how a protocol can get created and, handed off control to a community in a really strong way, following, what we knew. I don't think there's that much I would do differently because I can't go back in time. I can't go back to 2017. Like, I can only give advice to builders, in the ecosystem in 2023 as they think about these things.
Yeah. Have you thought about, so you've been, kicked off Compound Labs in 2017. Advice to new founders is to start offshore, spending more and more time at Robot Ventures, which by the way, I heard some numbers. I heard you and Tarun are having quite a good couple of years at Robot. So hats off to you. And have you thought about when it's time to pass the reins at Compound Labs?
Well, I'm not even sure what you're referring to. But I'm sure we're gonna, especially as we start to shutter the Compound Treasury product, rethink, nice. what opportunities there are for institutional products in the space. At this point, Compound Labs has been focused just truly on institutional products. And so, we're probably going to be rethinking what that means. But I think in some sense, I'm going to continue to operate and invest and spend my time in the crypto ecosystem. I don't really see myself, stepping down or leaving the industry.
You're not going to go work on AI, Robert?
I am not going to go work on AI. I've
Good.
tried to do a little bit of ChatGPT 4.
Yeah.
I haven't used, DALL-E yet, but I'm not the best query, writer.
Yeah. I am, so I met with the WorldCoin folks last week, and I'm trying to decide whether or not I think that is like a wild invasion of privacy, or whether or not I think that once GPT-3 or GPT like 5 or 6 rolls out the ability to like do things online for you, whether WorldCoin like saves us from that kind of world. So yeah. So.
I think the true measure is actually going to be when like ChatGPT is like actually funny. Because like right now you can tell like that it's like just a really bad AI. When you ask it to like write a joke or like be funny in any way, it's just like, it's so shockingly not funny. And it just hasn't figured that out at all. And like, I think it passes the Turing test when it can like tell a joke, like actually like be funny.
Yeah. Well, I think it's tough to tell a joke in text. You need like a voice almost, or maybe you just needed to create incredible memes. So, but it's funny. I was back in San Francisco. I was showing my parents GPT-4, and my mom remarked, she goes, "You're using please and thank you all the time." I was like, "Oh man, I didn't even realize I was doing that."
Yeah, so, you got to say please and thank you to the robot overlords.
You do exactly. Yeah. So, all right, man. I want to shift gears a little bit and get your take on. Actually, this is kind of like same gear, but like real world asset stuff. And so Coinbase just put out this piece on like flat coins. Real world, I spend a lot of time inside of Maker, and we talk a lot about real world assets. I'm just curious about your like overarching view on like whether or not it makes sense to pull off chain assets on chain. Yeah, I'm curious to get your take on that.
The answer is yes. I mean, I personally think that pulling off chain assets on chain is the superior approach to pulling on chain assets off chain. And you mentioned Maker, so I'll give you a great example. So MakerDAO is actually getting quite good right now at taking assets from on-chain to off-chain. They're taking DAI off-chain when they let institutional counterparties borrow DAI directly from Maker, and they're getting good at taking stablecoins, which serve as collateral, off-chain to invest in assets off-chain. So MakerDAO is doing one approach, which is called take things from on-chain, off-chain pretty well. So they're like building their like muscles around like moving assets off the blockchain. I actually think that's the wrong approach long-term. I'm actually way more excited about the inverse of that, which is taking assets from off-chain on-chain. So like, how do we get, all of the assets that exist around the world to be represented on-chain? Like when all of these assets from like stocks to bonds to commodities to real estate to art, like when all of these assets are represented on-chain, they're all going to be more useful. They're all going to be more programmable. They're all going to be more composable. And like, that's what's going to usher in, a utopia of blockchain, so to speak. But until then, I think a lot of what's happening is the opposite, which is assets are going from the blockchain to the off-chain, which is the wrong direction.
Yeah. It's like moving like internet native news like onto print. It's like, that's probably not the way
exactly. It's like starting a newspaper to write about crypto. It's like, why?
Yeah, exactly. Though who had the magazine? Wasn't it Bitcoin Mag had a nice little magazine?
That's true. But that was early days.
Yeah, exactly. All right, quick break from the show. There is this kind of overused cliche saying in crypto, but it's true. Bear markets are building, and everyone tells you that and everyone knows it. What people don't know is that if you're building apps in crypto and building apps in Web3 without using Quicknode, you are building on hard mode. So Quicknode is this amazing blockchain development platform. It reduces costs, streamlines the time to market for your app, and it offers consistent performance at scale. For folks that have built apps, you will know that there are a couple key points here. One, Quicknode offers unlimited endpoints across 18 different chains and 35 different networks. They have response times that are 2.5 times faster than any of their competitors, 99.99% uptime, and a dedicated 24/7 customer support team. If you've been listening to Empire for a while, you might know that I am no GigaBrain developer, but I do know a lot of devs and a lot of great product teams at other places. So when I see Coinbase and Twitter and Adobe and OpenSea and Dune Analytics all leveraging and trusting Quicknode to power their business, that's when we get excited and that's when we want to partner with them. They're the best solution for any leading crypto and Web3 company that is seeking an end-to-end blockchain development platform right out of the box. So my message to you, get off hard mode, let Quicknode handle the blockchain infrastructure, let Quicknode handle the security, let Quicknode handle the performance while you focus on building beautiful products for your users. Visit quicknode.com, super easy. You can use code EMPIRE. You'll get a free month on their build plan. So don't forget to use code EMPIRE. Santi and I got to get credit for this one so they know that we sent you, and you will get a first month free. Hope you guys enjoy it. All right, folks, it is time to talk about one of my and a lot of your favorite DeFi protocols, Synthetix. Synthetix has been pushing the limit in DeFi innovation since 2017 and has just started its most exciting transition yet with Synthetix v3. With Synthetix v3, any protocol can now tap into Synthetix liquidity to bootstrap derivatives markets. The transition has already started with Synthetix Perps. Synthetix Perps taps into Synthetix's liquidity layer and is a new primitive that developers can leverage to launch DeFi derivatives. The Perps product has been going incredibly well so far. Hopefully you've seen it. It's had some great traction, hitting 500 million in daily volume this March. We know that liquidity rules DeFi, and Synthetix is becoming the modular liquidity layer for DeFi derivatives. As a trader, you can trade Synthetix Perps with low fees in over 20 different markets at Quenta.io, Decentrix.com, and Polynomial.fi. And this opportunity set keeps growing with 10 new partners in the pipeline ready to launch integrations on top of Synthetix, including front ends, structured products, and institutional offerings. The team gave me a sneak peek of all this stuff. It's really cool. Would really recommend you check out synthetix.io/perps to learn more. And if you're looking to build on Synthetix, hop into their Discord server, reach out to the team directly. Make sure to tell them that Empire and Santi and Yano sent you. Again, synthetix.io/perps. You can also hop into the Discord server and reach out to the team directly. Any like updated thoughts on like stable coins now that we're on the other side of this kind of bull market and like deep in this bear, like thoughts on stable coins, what the future stables could look like?
Yeah, it's a great question. So, the most interesting event in my mind was, 2 weeks ago or so when USDC depegged.
Yeah.
I actually thought that this reaffirmed the value of stable coins and the risks really well in like a very concise argument, which is all of the money behind USD coin was there. They had 3.3 billion at SVB, which temporarily on the weekend of SVB's demise, nobody knew if it would be there come Monday. But USD coin, I'm going to paraphrase the numbers. There was $46 billion of USD coin and $46 billion of assets backing it. And even though it was like, so obvious that like this was a 1-to-1 dollar pegged stablecoin, the market price didn't reflect that. The NAV of one USD coin stayed at $1, but the secondary market for USD coin went down to 88 cents on one wild, tumultuous weekend. And the reassuring thing is the fact that like when everyone sort of came to their senses, it was obvious there was still $1 backing each USD coin, and they were convertible 1-to-1 with dollars, and the whole system worked exactly as advertised. And obviously USD coin should be worth $1. But as it depegged, it just showed that there was like an irrationality that was present in the market where I feel bad for everyone who sold USD coin at 88 cents because they lost a lot of value. But like they sold it because of like an uncertainty. And I think that actually creates a really strong, roadmap for stablecoins and how they're going to work in the future, which is the collateral behind them shouldn't have to operate just on banking hours, right? The failure of USD coin for that one fateful weekend was because you couldn't actually mint and redeem it over the weekend because the traditional banking system doesn't work on weekends. That's the crazy thing and the crazy opportunity. If USD coin was mintable and redeemable during the weekend, on crypto hours, which is 24/7, there never would have been an imbalance in the first place. And I actually think that, like, there's a lot of ways which the financial infrastructure can upgrade over time. But the most important one is just the concept of weekend hours. Like, finance doesn't operate 2 out of 7 days per week. And, 16 out of 24 hours per day. Like, that's the crazy thing to me. Like, finance only operates a very
one of the big issues with SVB is just that they closed down at 4 p.m. so people couldn't get their wires out. Like, that was one of the core issues here.
Right. SVB closed down at 4 p.m. So what are you going to do? And like, stablecoins, even when they're one-to-one backed, aren't one-to-one redeemable. And USD coin wasn't one-to-one redeemable for 2 days and many hours, from Friday, 4 p.m. to Monday when everything opened back up again. And so, the stablecoin is still beholden to the legacy financial system. And I think that creates the opportunity, even for one-to-one value-backed stablecoins, to improve. I leave it to, the thinkers over at Center, which sponsors USD coin. But this is a huge opportunity that I think is going to be solved over the next couple of years.
Yeah. Well, I mean, so Coinbase launched Base, and they just put out kind of a call to action, like ideas for builders, I think they called it, or requests for builders. And one of the ideas was for what they called flat coins, which is basically decentralized stables that essentially track the rate of inflation. And I guess you can kind of get this in like the bond world, like an inflation tracking bond or something like that. But their idea would be like you'd have an entirely crypto native stablecoin that tracks the rate of inflation. I'm just, I want to get your take on this, or like maybe other stables out there that aren't USDC, like what Frax, like Ampleworth. I haven't looked at Ampleworth in a while, but like some of these, I'm just curious to get your take on decentralized stables right now.
Yeah, so this is a really fun, question, because a decentralized stablecoin that doesn't rely on one-to-one backing, but relies on over collateralization, like MakerDAO, like some types of stablecoins, can use anything as its target peg. So when you think of the stablecoin DAI, it doesn't have to target $1. It could target $1.1. It could target $1.03. It could target 1 Ether of what it's worth. The only thing that's required is that there's more collateral backing it than the value of the stable coins that are represented. So it doesn't have to use, a target of $1. It could use €1 as the target. You can easily make a euro over collateralized stablecoin that's decentralized. You can really make an over collateralized algorithmic stablecoin, using any target you want. And so, I really think what, Base by Coinbase is asking for is, if they're going to have a decentralized stablecoin on that chain, why peg it to the dollar at all? Why not peg it to something, non-dollar, right? People have talked about pegging a stablecoin to like a basket of currencies, kind of like, special drawing rights, or like, a broad basket. You can peg it to anything. And so I actually think it's a cool idea to peg it to an inflation index. I think the downside is going to be that like consumers aren't going to like get it, so to speak. If you have like one, we'll call them Empire, and Empire is a stable coin that like, is pegged to some inflation basket. Each Empire is going to be worth, less over time. Or like, even if you do the inverse of it for its peg, like it's going to be worth more over time. It's going to be worth like $1.1. It's like, as a user, it gets a little confusing, and it's less usable than a stable coin. Like if you have an Empire buck that's worth $1.2, like it's hard.
I basically think that would never take off until, unless you had a world where something like the US dollar was experiencing hyperinflation.
Yeah, and like in that world, the world where biology wins, and like,
right,
that's not a fun world. And like, to be honest, like,
no,
I'll just retreat to a cave and like not worry about this stuff.
I'll join you. Yeah. And I'm also not sure people are in that world are like moving their capital into like this kind of like low market cap, like inflation hedge stable coin that's run by some like a bunch of protocol devs. That kind of feels unlikely to me. So Other things, Robert, I want to get your take on AppChain Thesis. We talked about this several months ago when you were on the pod, but I want to get your kind of like updated take on the AppChain Thesis. You guys, if I remember correctly, had a plan to launch compound chain on, what was it called back then? Substrate or the
Yeah,
Polkadot SDK?
Substrate,
Um,
which was part of Polkadot.
yeah, and I'm just curious to get your like. So I think Cosmos like really hit a narrative 6 or 7 months ago. Kind of a lot of people were thinking about following in DYDX's footsteps. Then you've kind of had the L2 narrative on ETH has really taken off. You had like Coinbase launch Base on the OP stack. Then you have like Arbitrum doing a lot of having a lot of conversations about L3s. Like, what is your updated framework around how you think about app chains?
Yeah, it's a great question. I think an app chain as an idea is incredibly valuable if you need incredibly specialized performance that you can't get from deploying on a main chain for some reason. If you're trying to do one thing, a lot of times per second, an app chain makes a total sense. Some of the best app chains, so far historically, have been either things with low usage or, special deployments of things like DYDX, using Starkware, where you've gotten a lot of transactional throughput that like would have been horrible on an L1. I don't think there's that many applications that have the usage to warrant an application specific chain or deployment, frankly. And the ones that do are well served by having an app chain. And the way I think about it is an app chain is like a semi-quasi composability with other things in crypto. If something's on its own chain, the only composability you get is like via exchanges that sit above everything for you to be able to move assets from like one chain to another, or bridges that are built between one blockchain and another. It's like really, quite clunky to have any sort of like even value transport between blockchains. You're generally either using exchanges or bridges, which create new assets. An app chain is like similar in that like the composability is not great. If you look at any of the Cosmos app chains, right, they're all useful. It's a great platform for app chains. Like they actually all work. It's kind of amazing. A lot of people have been able to use Cosmos to launch a chain to do their thing. And they've had a lot of success at that, way more than, in my opinion, Substrate and Polkadot has. But even within that, like the user experience and the composability between applications is like, it's rough. If you've ever used Cosmos, it's not easy or intuitive to like move assets and value between their ecosystem, like, chains. They all kind of feel orphaned, even though they're not. It's just like, it's a really complex user experience that I don't think fits for a mainstream population. Like, if you're extremely technically sophisticated and like you're a real degen, like you navigate that stuff. But most of my friends are not going to be navigating like Cosmos chains.
So I mean, I like if a protocol gets big enough, like maybe use Uniswap for example. Like Uniswap probably like leaks some value through MEV, and like they need like there's probably some reasons why they would go build their own chain. Which I don't know if you ever read like Dan Elitzer's piece on this. But like someone like Uniswap who's gotten that big, does it ever make sense for them to launch a Uniswap chain?
I mean, either they at some point, will have a chain, which then like people are going to have to very deliberately move their assets to Uniswap chain in order to trade on the Uniswap system, or they're going to have to, figure out MEV in some other way. But like, MEV is the core enemy of Uniswap. I tried to trade on Uniswap like a few months ago and I had forgotten about MEV and I just submitted a transaction. I was like, oh wow, like I should have like, really lowered the, percent slippage tolerance because I got ripped up by MEV. Like
you get hosed. Yeah.
You get hosed.
But you got to imagine like so do you think that is behind the Uniswap wallet thesis? Like where do you think MEV will end up accruing?
Yeah, it's a great question. I mean, I think and MEV is so complicated, but I think long term MEV is a deadweight loss and it's going to get cut out through technology. Like it's a function of right now blockchains being a really bad platform, frankly, to trade on because you're basically telegraphing what you're going to do to everyone, even if it's like, as most transactions are telegraphed to everybody. You can obviously send it directly to a mining pool and all these things, but like that
No,
UX is
no
not
one's
built
doing that.
out
Yeah.
for the majority of usage.
Yeah.
And so it's just not a good platform to combine trading and broadcasting information.
Yeah. By the way, MEV plug for anyone who's listening and who likes podcasts. We have another podcast called Bell Curve. We're hosting with Hasu. I don't know if you know the Flashbots team, Robert, but we
Yeah.
have a whole season on MEV with my co-founder Mike and Hasu, which is pretty interesting.
Yeah, and I believe they have some really cool ideas on how to like take all the MEV and redistribute it and to like,
Right.
say like, okay, it's a reality that like you're broadcasting information, but how do we offset that in other ways and like spread out the MEV and like do all these other economic things to change the system?
Yeah. Well, maybe that's a nice pivot into value accrual and just like how you think about this, which is kind of a related question. Like, do you think value ends up getting accrued? Let's keep with this Uniswap example. Like, does value get accrued to the Uniswap token, and or basically the Uniswap protocol, the Uniswap like mobile app essentially, or their app, or like Uniswap Labs, which is like the builder on top of all of this stuff, or whatever they're calling it these days?
Yeah, that's a tough question. I mean, right now, I would say, at this moment, there's really only two things that are accruing value. There's the miners slash MEV, which is capturing value from users,
Right.
and the users who benefit from this thing existing and are like, hey, I had no ability to swap XYZ token. Like, this thing is cool. It's not listed on some exchange. I love Uniswap. Or they're like, I want to trade Ether and stablecoins all day, and there's somewhat low slippage, and like I can do it in my pajamas, and like that's awesome. Um, I really see all of the value right now just for like users and people taking value from the users. I don't really see any value temporarily, and like this could change over years, going to the protocol or going to the labs or going anywhere.
Yeah.
The primary benefit is that this awesome protocol exists and it has tons of users, and the users use it because it makes their lives better. And the miners and MEV searchers, make their money off of those users. And like, that's the ecosystem.
Yeah. Do you think there's any chance Uniswap turns on the fee switch?
I don't follow Uniswap governance too closely.
Yeah.
I've been delegated some Uni tokens and I vote when there's like really important proposals or
Yeah.
contentious ones. So I don't pay too much attention on a daily basis at all. But, last I saw on their forums, there was like some debate over whether or not there should be a fee switch. And the last I saw, it was like, why would we experiment with the most important pools? Like, why wouldn't we want to like experiment with the least important pools and fees? Because like, what if we wreck, the most
Right.
important
Right.
pools? Because like the proposal was like implement fees on USD coin Ether, like the big boy.
Yeah, we'll see. I feel like there's especially with this regulatory, I mean, tying it back to the beginning of the conversation, I feel like there's even if it makes sense for the protocol and for everybody involved, there's no way they do it in this market. So
I don't know. I'm not a lawyer and I'm not part of the
no,
Uniswap world.
no.
So
All right, let's start to wrap this up about like just thinking about the future a little bit, Robert. You obviously spend a lot of time on the investing side at Robot Ventures. There were a couple other things that Coinbase had like a request to build. One was the flat coins. The three other was on-chain reputation, on-chain limit order books, and safer DeFi as they called it. I'm curious what you think. I don't know if any of those would fall into this answer, but like curious what you think are like the missing protocols or the missing things right now in DeFi.
yeah, it's interesting because all of these things have been tried at some point in one way or another on Ethereum, on Solana, on Avalanche. Like, none of these things are radical ideas, like, frankly. And I think the more important question is like, why haven't any of these like actually really worked or taken off, or like where have they worked and taken off? So reputation is a really, really tough one that, frankly is like, probably best used for like actually extending credit to somebody,
Yeah.
right? That's like the primary use case is like, oh, you know, Robert is good. I can lend him 10 USD coin. Hooray. Like, I know, he has some reputation on chain. If he steals the 10 USD coin, no one should lend to him again. It's like, it's primarily a thing tied most closely to like unsecured credit. And I think the market for unsecured credit and DeFi has like kind of imploded over the last year or so. Like a lot of the like projects that were like exploring this, like Maple and others, had a really tough time because it turns out all the biggest players borrowing unsecured in the ecosystem were bad. Alameda was bad, right? 3AC was bad. It was like all the people that were borrowing using their name were not people you want to lend money to. And so I think like even the idea of unsecured credit is like taken a hit and taken a back seat and like has decreased like the relevance of reputation, at least for now. Like I don't really see a reputation-based system needing to exist or working for some time. I don't think it's necessarily even a priority. Like even if you had an incredible reputation system, like, so what? What are you going to use it for? Like, so frankly, like I'm kind of bearish on reputation. When it comes to limit orders, this is also complicated. Like the earliest versions of 0x had limit orders. Current versions of 1inch and Matcha do have limit orders, but they only get filled when like there's enough MEV for someone to fill it, basically. Like limit orders do exist right now, and like they're not even bad, so to speak. You're basically just like putting it out there and waiting for there to be enough MEV for a searcher to include it and take your profit from you. But they work. Like, I know Matcha and 1inch and like all of those things are functional, and Uniswap sort of quasi vaguely functions as a limit order trading venue today. So range orders on Uniswap give an individual the ability to say, I'm willing to sell this at a price that's higher than it is today, or I'm willing to buy it at a price that's lower than it is today and not do anything until it gets to that price. And so when you squint, there's already in Uniswap limit orders. They're just not called that. And people, whether they're individuals or trading firms, actually do have the ability to use it like limit orders in a lot of ways. And so limit orders exist. I think Solana has had a lot more success than Ethereum, just in terms of its, data structures for implementing limit orders. The limit order books on Solana were honestly quite usable when I looked at them compared to Ethereum. But, we'll see if anyone actually implements limit orders, on that chain. The biggest problem historically with limit orders was it costs a transaction to cancel them. Like you literally have to submit an on-chain transaction to say, remove this limit order, whether it's like a Matcha or 1inch or Uniswap, like range order, like you literally have to do a gassy transaction to cancel it. And so the primary question is, if it's on base and, to roll up and transactions cost 100th as much as they do on Ethereum, do people care? And will they pay that 1 cent? Or is it still too expensive from a cost or user experience perspective to be submitting transactions every time you want to cancel an order? One of the best things about centralized exchanges is you can make 100 orders and cancel 100 orders like instantly. Like you're not like submitting transactions and waiting for them to be mined. Like, API-based systems that are like high throughput are like so much better for like orders and limit orders and canceling them than a blockchain is. So I'm a little bit bearish on that RFP as well. And what was the third one?
What was the third one? Safer DeFi, which I didn't. Let's see.
I don't know what that means personally.
Self-service security testing tools, auditing services, threat prevention, circuit breakers, incident response systems. I mean, you guys have had a couple like all hands on deck scenarios in the last couple of years. Like, any learnings from those, like things that could have been built, or not really?
It's a great question. I mean, there's constantly, upgrades to like how society at large thinks about like security and best practices. Within the compound ecosystem, one of the like harder things was that it became a distributed, team and process and, ecosystem before, other projects. Like it's actually harder if you've like moved to like full on distributed governance, like flat out. Like when it's still just like one team with admin keys, like it's so much easier to manage security than when it's like there isn't a team.
Right. You just jump on a call and you say, shut it down and we'll pick it back
Yeah.
up in 10 minutes.
Like
And
when
yeah, of
it's
course.
centralized, it's so much easier to do security
Yeah.
than when it's distributed. And so, we've definitely gotten to see a lot. I definitely think there's like room for everyone to develop better tooling, but I'd have to really dig into that RFP to understand exactly what their ideas are. It sounds like it's just
Yeah.
like we want ideas to make everything better and safer, which is
Yeah.
cool. Like,
All right.
that's a
So
win.
if you're not stoked about any of those Coinbase RFPs, is there anything that you're like, oh my God, like put a great founder in this company in front of me and I'm funding them 10 times out of 10?
Oh, all the time. I mean, when you're investing at the early stage and Robot Ventures invest, or tries to invest as early as possible, we're really just betting on people.
Right. Right.
Mostly because ideas change. And like in a rapidly evolving ecosystem like crypto, like what was a good idea 3 months ago might not work once you try it, or doesn't make sense 3 months into the
Yeah.
future.
Like who did I just see pivoted? Privacy L1 to Espresso.
Mm-hmm.
I don't know if you guys did the Espresso, but like I feel like
Yeah,
that's a
we
good
love that.
example. Like now they realize like the way rollups need to decentralize is like one of the key foundational building blocks right now, and like they've pivoted away from their privacy L1 into helping to build that.
And that's the best example
Yeah,
possible, which is like, founders who understand the systems and like the ecosystem and like what they're trying to do are comfortable being flexible and like skating to where the puck is going and making changes and like rethinking and reevaluating their assumptions. And like that's exactly the type of founders that we like to back, where it's like, hey, we want to support you, not the idea. The idea can change. Like you should feel empowered to figure out what's going to work and add value and like be useful. And like don't feel like you have to like do
yeah.
the idea that we funded, like just be excited
Just go
about
be
what,
useful. Yeah,
yeah,
exactly.
yeah, like build something that people want,
Yeah, man. Well, it's been great. This is a fun conversation. Anything else? Kind of big things, investing landscape, thinking about the next bull market, next cycle, compound, like really anything that's on your mind that we haven't covered.
Yeah, I think, I don't really think about bull markets and bear markets and all of that. I would just say that, we're at a really interesting juncture where, my biggest hope is that a year from now, there's actually legislation in America that like begins to set some of the rules, for crypto. Like we still have really not had any crypto legislation, period, full stop. And it's still the only legislation we have is like non-existent. It's just regulation by enforcement.
Yeah,
Like the number one hope for the industry is that there's some legislation that like helps outline how crypto is intended or should exist in the US, because right now it's just still a complete absence and a complete void of legislation.
yeah. When you went to DC and when you've gone to DC and you've had conversations with be it policymakers, regulators, politicians, lobbyists, whoever it may be, do you feel that they have a sense, like an understanding of like what the compound protocol is, or right over their head?
Yeah, I think a lot of legislators and policymakers and regulators are still relatively early in understanding all of these things because the industry is so wide. I mean, there's like literally like even the word DeFi includes what I would call DeFi protocols and also things that I would say are like absolutely not DeFi protocols, right? Like including like actual just like Ponzi schemes, right? And
Yeah,
so
yeah,
like even the basic things like, what are the words? Like there's so many things that go into them and these large umbrellas of like activities. And so I've always just tried to like focus on explaining and educating just, what are the virtues of like why I think DeFi is like powerful and good for society and makes a better world. And, try to also explain like why some things like aren't DeFi, but like it's still like an educational phase for the most part. And like what's cool is like everyone's sort of waking up to the fact that like this is totally new and they want to learn about it, and there's a lot of excitement to like understand what's happening in this market that's made the news mostly for bad reasons, mostly for FTX and 3AC and Celsius and Genesis and all of the firms that have like imploded in like terrifying ways. And so like the challenge that I find is just like trying to educate and say like, okay, you've heard about it from all the bad things, But like, so why are people in the industry excited, and like, what are the good things? And like,
Yep.
how do they lead to a more efficient and transparent and like more autonomous financial system? And like, why is that good? And I think there's a lot of excitement for that once you start to explain it.
Yeah. Well said, man. It's a good place to end it. Appreciate you coming on as always. This is fun.
Yeah, this was. We'll do it again sometime.
Cheers, man.